Hi everyone, welcome to our webinar on all things pensions today. We're just going to give everyone a couple of minutes to filter in while everyone's joining the call. It's always nice to see where everyone's joining from when we run webinars, so we'd love it if you popped in the chat where you're joining from. I'm Betty Underwood and I work on the marketing team here at Giant, especially focusing on our events. I'm joining from Essex today. Today we're going to be talking about all things pensions, and we are lucky enough to be joined by our friends from Interactive Investor. So starting with Jess and then making our way around the whole group, could we please go around and introduce ourselves and also tell the audience where we're joining from?
Okay, so do you want me to start, Betty? Yeah.
Yes, please.
Okay, lovely. So, we're going to start by reviewing Nest pensions, and then we're going to move on to salary sacrifice options at Giant and external providers that you may wish to use. And we're also going to discuss the benefits of salary sacrifice and moving across to the premium package at Giant. So here are your free pension options at Giant. The first is Nest, which is an automated workplace pension scheme, and these are arranged by your employer, which in this case is Giant. This scheme involves auto-enrollment, and we'll address this further on the next slide. Next are our salary sacrifice options. Choosing these options will mean that you give up part of your salary to be paid into a pension pot. In some cases, this means that you and your employer pay less tax and national insurance. We have a simple, stress-free setup process for our in-house Standard Life. You also have the option of using an existing pension provider of your choice on the provision that they're already working with Giant, such as Interactive Investor. So the Nest Workplace Scheme is an automated workplace scheme. The concept of a workplace pension was introduced to encourage workers to start building retirement benefits earlier. In 2011, the Pensions Act made it compulsory for employers to auto-enroll eligible workers into a qualifying workplace pension scheme starting from October 2012. Our workplace pension scheme is with Nest, and automatic enrolment takes place once the 90-day deferment period has lapsed. So as long as you fulfill the criteria for opt-in, you will start seeing deductions after 90 days. The criteria being that you're aged between 22 and state pension age and earn more than £10,000 each year. And that translates to 192 or more per week, or over 833 per month. In this current tax year, you will contribute 4% of your pensionable earnings, and the government adds another 1%, and Giant will contribute another 4% from the assignment income which is received from your agency. So pensionable earnings are based on basic pay, which is your national minimum wage, and holiday pay, as opposed to your total gross pay. These deductions are retained per payslip and can be seen on both the invoice reconciliation and payslip parts. So the process for setting up salary sacrifice pension. So if you're looking to maximize or increase your pension contributions in the most tax efficient way, a salary sacrifice scheme may be the better option for you. A salary sacrifice scheme is an arrangement where you give up a portion of your salary in exchange for an increased employer contribution into a pension scheme. For this reason, you should choose salary sacrifice with Giant, and you will be asked to sign a salary sacrifice agreement. With salary sacrifice, you will effectively reduce your pre-tax salary by a proportional amount, resulting in a reduction in your PAYE tax. As the salary sacrifice amount is retained prior to the calculation of employers' national insurance and employee gross pay, you will also find a reduction in both employers' and employee national insurance contributions. Should you choose the salary sacrifice option, you could save 540 in overall taxes for every £1,000 that you contribute. When paying an alternative provider, we recommend a monthly payroll. and this is due to direct debit mandates that must be decided between your provider and Giant. If you're looking to maximise your contributions, we will take ownership of calculating your maximum amount, as we must ensure the monthly contribution does not reduce your cash earnings below the national minimum wage, and thus compromising our ability to process your payroll on time. We are also able to provide you with quotes to illustrate the net amount of your contribution options. So when using any of our existing external providers, setup can take up to 4 weeks to complete. And this is a result because of the checks required by external providers. You will need to contact your pension consultant or submit all necessary forms required for establishing a new employer for the pension scheme. And please be advised that the forms will need to be signed by our company directors, so they may take additional processing time. Finally, please be advised that salary sacrifice with external providers will not start from your first payroll. We will need to see a history of payments, so the salary sacrifice will typically begin from your second pay run. To establish contributions with any of our existing third-party providers, you will need to send us the following details as a message via your Giant employee portal. The first is the pension company name. Secondly is the pension reference number, and this is your policy number with the provider. Thirdly, we will need to receive your monthly fixed contribution amount. Next is your chosen payroll date. So as advised already, we can only facilitate payments to an external provider when you're on monthly payroll types. Therefore, you need to advise on which day of the month you wish to have your payroll processed. And finally, you will need to confirm that the scheme is a qualifying pension and will allow salary sacrifice payments, as we will not be able to continue the setup if your provider does not accept these. So our private pension schemes are only available through our exclusive premium package. Considering the ability to save hundreds of pounds on contributions, this would be a modest contribution for sizable benefits. This premium price tag allows Giant to deliver the level of service and infrastructure to facilitate pension payments to private providers. We've also included additional benefits, such as Giant Advantage, which is a bonus and benefits scheme, where you can access discounts to vouchers at your favourite supermarkets, retail outlets, restaurants, and travel agencies. Under the medical cover, you can take advantage of our 24-hour GP consultation service, a private prescription service that sends prescriptions directly to your pharmacy, comprehensive health and wellbeing overviews, reimbursement of dental, optical, and diagnostic consultants such as MRIs, PET, and CT scans. And the medical cover is provided by BHSF. And within 1 month of registration to the premium package, you will receive a welcome pack in the post. And you can also request an income and benefits review. So on the screen, you will see a table that compares our Giant Standard package with Giant Premium. You will see the main differences are the access to salary sacrifice, Giant Advantage, the Employee Assistance Helpline, and the 24/7 GP service and other private health benefits. Therefore, if you're currently on our standard package, requesting a private pension will trigger a need to re-accept your assignment schedule on the new margin. The premium package is at a weekly net margin of £39.50, which has a net impact of £20.14 on your weekly earnings. So just a bit more information on Giant Advantage. Giant Advantage is an employee benefits program that allows you to save hundreds to even thousands of pounds per year. Giant Advantage has thousands of discounts across a variety of reputable brands, and these can be in the form of vouchers, reloadables, and cashback cards. At your disposal is an extensive benefits package from car leasing to e-vouchers to use online for major discounts on holidays, the cinema, the gym, or supermarkets. And by using Giant Advantage, you can see a significant reduction in your everyday expenses. So to summarize, from this webinar, we hope that you take away the following points. Firstly, that Nest auto-enrolment occurs after 90 days of employment and on the basis that you will meet the qualifying criteria. Salary sacrifice is a very tax-efficient way to save towards your future, and you could save £540 for every 1,000 that you contribute. You can continue with contributions with an existing pension provider. And finally, you'll be able to gain additional benefits with our Giant Premium package, ranging from private medical insurance to our benefits platform, Giant Advantage. So that brings us to the end of Giant section of this webinar, and I'd like to pass you across to James from Interactive Investor.
Thank you very much, Jessica, and fantastic to see so many people on the webinar today. Thank you for the introduction. So, from Interactive Investor today, you have myself, James Derham. I look after business development at II, and we also have. Hand over to you, Colin.
Oh, sorry, guys. Yeah, Colin Doyle. So I look after the SIP product and proposition at II. Probably worth mentioning that before joining II, I was a contractor working in a pure IT role. So in the past, I've had my own grapples with things like IR35 and used limited company and umbrella companies as well. So hopefully we can help today. But thanks for having us.
Amazing.
And Millie, do you want to give us a quick introduction?
Yeah, sure. Yeah, so I'm Millie or Camilla. So I head up the media relations at II. So we'll talk through some of the research and some of the media work that we do, which you might be interested in. But work very closely with Colin and James and the broader team as well.
Thank you. So the way we wanted to structure today, I wanted to give you a very brief overview of who Interactive Investor were as an introduction. And then we're going to move on to Millie, who's going to talk about some of the wonderful work we do from a PR perspective on pensions and the research we do in the contractor space. And then Colin's going to take the bulk of this presentation, which will be more detailed work on your pension options and in particular the II self-invested pension product. And we hope you'll have lots of questions at the end, and we'll try and answer them as appropriate. So, I guess in terms of Interactive Investor, there, just looking at the slide, you've got our robots in the bottom there. We spent quite a lot in brand over the last year or so. So hopefully you've seen those on TV over the last year or so, and we're actually, one of the pension providers that Jessica spoke about, but we are actually the UK's second largest investment platform. And it's important to say we're not financial advisors, but we think we do provide the tools, content, guidance, and education for retail investors to make informed financial decisions and help take care of their financial future. So we are actually headquartered in Manchester. We're about 600-700 people in Manchester. We also have offices in London, where I'm based, and Leeds. The company's been going for over 30 years, or nearly 30 years, actually. We were formed in 1995. We've grown considerably in that time. We now look after 430,000 customers and about 70 billion AUA on our platform, and we're actually part of the Aberdeen Group at the moment, which is a FTSE 250 company. So, in terms of our investment platform, a couple of unique selling points before I move on. Firstly, our broad investment option range, and that can cater to sophisticated investors looking at buying individual stocks and shares in individual companies, to those that are maybe starting their investment journey, and those that want a lot more guidance. So our investment options are 40,000 stocks, shares, funds globally, ranging from the sophisticated options to the simple, ready-made investment solutions and independently governed recommended fund lists. And then secondly, our other key selling point is the fact that our fees to access the platform, the content, the guidance and education is a low monthly flat fee. And that differs from a lot of competitors in the space that charge you a percentage-based fee on the amount of assets you hold on the platform. So over a period of time, that could enable you to make significant savings, especially in a product such as the SIP. So those investment options are available in tax wrap products such as a self-invested pension product, but also ISAs, junior ISAs, and trading accounts is available through our award-winning app or web-based. And Colin will go into a lot more detail, but we've won several awards, one being we're also a Which recommended SIP provider. And then just looking at some of the elements on that screen there, we have a market leading Trustpilot score. We actually execute about 25% of retail trades in the UK. And as Colin alluded to, I guess the reason we're here today is we know that approximately a fifth of our customers, operate in the self-employed space or the contractor space. So, we're really happy to be here. And without further ado, I shall hand you over to Millie.
Thanks, James. So as James says, we're a huge platform. We've got so many resources that you can have and explore on our website, and I can also share some links if that's helpful. But there's also a snapshot here of some research that we've done specifically on the pensions area and across a wide range there, because it's obviously a very difficult area to navigate. We try and do a lot to help our customers navigate the space confidently, and we want to empower them with the tools and all the information they need to make informed decisions. As James was saying, we're not financial advisors, but we do take a lot of pride in really informing and empowering our customers. And these three are just a few, so I'll share some links, and we've got a press and media page as well if you want to have a look at all the areas where our experts in the pension space, including obviously Colin as well sometimes, who you'll hear from soon, on a wide range of topics relating to the pension space and where we're quoted across the press and broadcasts as well. But here we've got our self-employed survey, which is actually a new launch for us. There's not a lot of research out there on the kind of unique challenges for self-employed workers, and when it comes to their pensions and and making quite big decisions, and when pensions are never far from headlines these days, and there's a lot of change and complexity, it's ever more important that we put this information out and that we make it accessible. So that was a nationally representative piece of consumer research we did with Opinion, which is a market leading research company that we work with. So we've got a lot of press on that as well, so it's worth having a Google and having a read. The SIP index is also new this year, so we do a broader index, which I also encourage you to have a look at. II is the only platform in the UK that actually publishes not only how our customers perform, but also how they actually invest. So we break down everything from what assets they're investing in, regions, allocations across different areas, to different ages, and in the case of the SIP index, we actually looked at how pension investors are investing and performing in accumulation and in drawdown. So it's very much the first of its kind. There's so much in there, and in true II style, we've tried to make it very accessible and engaging, so it's not overwhelming amounts of information, but still loads in there that's really useful to have a look at. And we got a lot of good press on that as well. And our survey. So every year we do a Great British Retirement Survey, and it's kind of an accumulation of those topics. So it's a lot broader, but a lot more as well on broader pension confidence and a lot of different areas. And it's the first of its kind. No other platform has replicated what we've done. It's nationally representative, and we put it out it's usually every autumn, but we're actually doing it in January next year, because we're revamping it a little bit. But I'd encourage you to have a look at that as well. So there's loads there, and if you have a look at our website and also our podcasts, there's loads of different topics that we dive into each week on the pensions landscape, and we use our brilliant spokespeople to make the information a little bit more accessible and engaging, because as I said, it is complicated. But if anyone wants more information afterwards, I can share links, and encourage you to have a look and have a Google and see where we've been quoted in the press as well.
Thanks, Millie. Hi guys. So I thought it's probably just worth having a little bit of a recap first about sort of pensions generally and SIPs generally. So the basic sort of the main thing about pensions is the tax benefits of the pension, and as you've seen today, you can get some fantastic tax reliefs and employer and I reliefs on the way in. You can pay up to £60,000 into a pension each year, but importantly, and very importantly, that money then grows in a tax-free environment, in a tax-free wrapper, so you can buy and sell shares and your holdings and get profits, and you won't pay any tax on that. You can receive dividends from companies, and you can also be paid interest, and all that grows tax-free over time. So it really is, a really good product for that. And then we hear quite a bit about people questioning pensions because it's a fact that you do pay some tax on the way out when you make withdrawals from it. But it's really important to understand that 25% of your pension comes out tax-free. You've then got your personal thresholds, and there's no national insurance. Even though you'll go through a payroll when you do start to take money out of a pension, there's no national insurance payable. So, when you compare the tax benefits that you attract when money goes into a pension compared to the tax that you'll pay when you take money out, there's a vast difference there. So the tax benefits of a pension really are very compelling. Next slide, please. And this is just a screen grab from one of our online calculators. We've got a pension calculator. If you Google II pension calculator or II SIPP calculator, you can get to this. But this is just an example of tax efficient compounding growth over just a 20-year period. So, in this scenario, we've got somebody who's age 40, they want to retire when they're 60. They've currently got £100,000 in the pension, probably from previous workplace pensions. And if they contribute, £1,000 a month, which, where we've heard today, I think, that means probably foregoing somewhere in the region of probably £420 maybe in terms of net income. If with a modest growth rate of 5%, you could end up with quite a chunky pension there. And that 5%, that could be quite conservative. It obviously all depends on what you invest in, your attitude to risk. So, there really is power in the sort of tax efficient compounding growth over even a relatively short period in terms of pension saving, as we can see there. Sorry, next slide. When you take money out of a pension, until 2015, most people would do something which we call buy an annuity, and basically what that gave you was guaranteed income for life. You could still take your 25% out tax-free, but the rest of the money usually went into buying an annuity. And in 2015, the government came up with some new options, and they were called pension freedoms. And basically, you may have heard of them described. A lot of people talk about flexi access drawdown, which is the main part of that. But your options now to access your pension and to take money out of your pension are, you've still got your tax-free cash, which is 25%. Typically, the other 75%, which is then taxable income paid at your marginal rate, you can draw down on that over time. And then you have something else called lump sums. Now, these have a really horrible name. It's called UFPLUS, which stands for Uncrystallised Funds Pension Lump Sum. But essentially, all that is it's a bit of both. It's 25% tax-free and it's 75% taxable. Now, it's worth mentioning here that you can mix and match those things. So, you might be in a place where you're partially retired and maybe already using things like your personal allowance. So maybe you just want to take tax-free cash if you're partially retired early on, but and then later on maybe you want to take drawdown and taxable income. It really is up to you. You can mix and match those things, and you don't even have to take all your tax-free cash in one go. You can take a little bit at a time. So it really is quite flexible now, and pension freedoms and drawdown are going to become more and more popular over time. Next slide, cheers. So SIPPs generally, not the II SIPP. SIPPs have been around since 1990. I think Nigel Lawson was the Chancellor when they first came out, and at the time they were thought to be very expensive, quite niche, very elitist. They were very, very attractive to people who ran their own businesses, who had commercial property, and would usually use them for buying that commercial property. At the same time, you could hold lots of different things in them, from art collections to even gold, and I've even heard of people keeping wine collections in them. But over time, they've become a lot simpler. They've become an awful lot more accessible, and today they're not that much different to personal pensions. The main difference is, very obvious. It's the number of investments that they open up for you. So typically, if you had a personal pension, you might get access to 10, 20, 30, 40 funds, collective funds that you can invest in. With a SIPP, you can probably get access to thousands of funds if you want to do that. And as James said earlier, you can buy individual stocks across global markets. So that that's a very big difference, but very accessible. And there's a lot of investment platforms that now offer SIPs. And one of the main things about that is, people can see it on the phone. You've got nice apps there where you can see your pension on your phone. You can see the value, and you can see the value on a daily basis. So, next slide, please. In terms of the II SIP, we launched that in 2017, and that was, directly as a flat fee alternative to other SIPs in the marketplace that charge a percentage of the fund value. When you start to look at that, I don't need to explain it too much. It really does become quite compelling when you start compare percentage prices to a flat fee. We've been taking salary sacrifice contributions from umbrella firms since 2018. In 2022, we reduced our fee to just £12.99 a month. At that point, also, we scrapped all our drawdown fees, any other admin fees. We don't have any exit fees. You literally get the whole product for £12.99 a month. In 2022, which, in recognition of that, most probably, we became a Which? Recommended provider, and there's some other accreditations on the left there, but we've repeated that every year ever since. So for the past 3 years, we've been a Which? Recommended SIP. And last year, we launched something called the Pension Essentials Service as well, which is a reduced service plan, which is just £5.99 a month. Now, everybody who joins the ISIP starts on that plan. And it's only when the value of your SIP exceeds £50,000 that you would move over to the £12.99 plan. So if you just wanted to SIP a SIP which sat alongside your other pensions or maybe old workplace pensions, then you've got a really good value there. And basically, until transfers happen or until you actually grow your pot to over £50,000, you can continue on that price. And then the point at the bottom there, sorry, can you just go back? And the point on the bottom there is I think that's a typo. That should say January 2026. But basically, next month, what we will do, we will be completing our 100,000th transfer into the ISIP. So, we really have grown the business quite substantially over those 7 years. Sorry, can you go on? We do surveys. We ask customers what they like about us, and it's basically 3 main things. It is the fees. We're on the right there. You can see some comparisons and the effect of lower charges over time, and you can see there what the impact that has on a pension pot over 30 years, and we illustrate that. And the people that join us, they understand that, and they don't leave because they understand that. Secondly, they tell us investment choice is very, very important. And thirdly, it's about the tools and technology. We have dedicated development squads within our organization who are purely focused on building out pension journeys on our app and our website. Next, please. Why consider the ISIP for your pension? So, I think I've probably mentioned all this, so don't really need to go through it, but, keep more of what you make, enjoy more choice and flexibility. Interestingly, as James said earlier, from a trust in our support, we've got more 5-star Trustpilot reports than any other UK SIP provider. So, that's a massive proof point. And control how you contribute. You can do it flexibly. Which a bit more on that on the next slide, I think. So since launch, we've had over £1 billion that have come in from employer contributions, which in the main has been sort of salary sacrifice. That's now the second biggest way people contribute to the ISIP today. So as I said earlier, you can contribute up to £60,000. If you're lucky enough to want to contribute more than that, there are rules as well. There's a rule called the carry forward rule, which you can find details about that on our website, which can allow you to use unused allowances from the previous 3 years. And as we've seen today from what the guys have been telling you, obviously you can arrange contributions to our SIP with your umbrella provider. Next please. Transfer into the ISIP. So on the right there is our sort of league table of where people transfer pensions from that come into us, but quite literally billions of pounds are transferred to the ISIP each year from other pensions, old workplace pensions and personal pensions that people have. Most types of pension can be transferred to the ISIP. It's really important before you do a transfer that you check that you're not going to lose any protected benefits and things like that. And as you will see on this slide, as all the slides, there are warnings at the bottom if you go back and look at any of this information, just to make sure, if you're in any doubt at all, you should consult a financial advisor. But most of the transfers that come to us come from life insurance companies. They also come from our peer providers. If they come from life insurance companies, typically the transfer will take place in cash, because we won't hold that particular life insurance company fund on our platform. So typically they will be done in cash. However, if you did want to transfer from another SIP or possibly from another platform, it's very likely you'd just be able to transfer the stock to us. And we could just, do a direct transfer. If you are interested in transferring to us, you literally just need to open an account. You can go online, make the request, and we basically take care of the rest for you. Next slide, please. In terms of investment options, so it's all fantastic, isn't it? When we say, we've got 17 markets globally, you can invest in shares, exchange traded products, investment trusts, mutual funds. But, that sounds a bit scary. It's a bit scary for me. And that's why, we give you lots of help and make easy investment choices available to you. So on the right there, we've got our Quick Start Funds range, which is a set of basically very well diversified, very good value investments, which aren't just used on our platform. They're not unique to us. They are global investments from Vanguard, and we select those as our Quick Start funds. We've also got the II Super 60, so that is a set of 60 different investment trusts, funds, exchange traded funds as well, which are selected with our partners called Morningstar. You may have heard of Morningstar, but they're experts in the field. And depending on your interest, whether you want to invest in passive, whether you want to invest in managed funds or a particular geographical area, you can go and choose a Super 60 investment for yourself. And similarly, we've got the ACE 40. So if you're interested in sustainable investments, again, there's a whole set of expert picks for you to choose from there. Even if you, if you're really not sure, in any journey that you go through on our site, in our app, where you'd funding for the first time, we will remind you of this, and we'll also point you in the direction of our II selected growth option, which is a great middle of the range fund, chosen for a wide set of needs for our customers. So that's always available as well. And I think that could be the end of the slides. Yeah, so, just some points to be aware of. I've spoken a lot there about different things in terms of contributing, tax, transferring, etc. It's just really important that if you're in any doubt, you take financial advice, but just be aware that in terms of the tax treatment, that can change in the future. In terms of the value of investments, obviously they can go up and down. So that's just the stuff I need to say at the end. Thanks very much.
Thank you so much. James, I think you might be trying to say something.
Yeah, no, Colin, I'd just like to say thank you very much. I think that was that was superb and a really fantastic overview of pensions and the II SIP. I mean, a couple of points I'd like to add. We mentioned the fee and the significant savings versus percentage-based fees. We do actually get asked quite a lot. Is that genuine? How can you afford to do it? And it is absolutely genuine, and one of the reasons we can afford to do it is because we've got the requisite scale, and we're fortunate enough to have built a sustainable business with the requisite scale to be able to do that. Another reason we do that, the flat fees, because it's kind of embedded into our culture and the way we operate. So we've done a lot of campaigning in the past for transparency in terms of pricing within financial services, and it costs us the same to administer a portfolio worth £5,000 as it does a portfolio worth £3 million. So we believe that the fee should be fixed, and a customer should be able to retain more of their wealth as their portfolio grows. And then I don't think it's actually included at at the moment, but we wanted to just say that to close off, we do work very, very closely with Giant. And when we forward this presentation round at the end, we have actually got a dedicated landing page, which will put the link in this chat. And on that landing page, there's all of the information and more that Colin has talked through. And there's also also maybe more importantly, how that process of how you can set up contributions via Giant should you wish to do so. So that's the process that Jessica described at the beginning. We've got a really simple process our side. It's one form which is sent to us via secure message. So it's not particularly labour intensive. We don't require a new form each month. So I very, very welcome you to visit that landing page that I think has been sent around in the chat. Read a bit more, and lastly, also on that landing page, as I alluded to at the beginning, we've got a customer services and operations team as well in Manchester. There's a direct line to a team of trained experts, not Colin, unfortunately, but another team of trained experts that can answer your questions should you have any, or if you'd prefer to email, you can also email them. So I guess that's the sales pitch at the end. We'd love you to visit that page and explore your options. And with that, I guess we'll pause for any questions or comments that have come through.
Amazing. Thank you so much. Thank you for the session. It's been really informative. We have got a couple of questions, but I think mainly kind of logistically for Giant. So I think it's best if we just follow up with those afterwards about the logistics of them working for us and being involved with you and things like that, which is exciting. So yeah, we'll follow up with those people. And as James said, we'll follow up tomorrow with the recording and also the slides if anyone would like those, and the contact details for you to get in touch further about these things. But I think for now, thank you so much, and we'll say goodbye and hopefully be in touch soon.